Yeah, no problem.
Okay, go ahead, Aaron. I'm sorry.
All right, let me hit it. I got it. But all right, so yeah, so there's a lot of loan options out there for your self-employed 1099 borrowers when traditional financing falls through. Um, you know, every one of your clients is going to have a different situation. So really depending on their situation, we can kind of gear a loan program towards them. So what mostly happens with your self-employed 1099 borrowers is they're usually writing off as much as they can on taxes, which is their right. Our tax code is basically written out to help out self-employed 1099, those who are running a business. So most of them are running most of their stuff through their tax preparer, and their tax preparer is writing off as much as possible, which is awesome. But when it comes to getting a mortgage, it kind of hurts them. So there's different options out there for those self-employed who might be writing off a lot on taxes. One of the biggest programs I would say for self-employed is a bank statement loan. You can use 12 months or 24 months of bank statements. And what the lender is going to do is they're going to look at those 12 or 24 months of bank statements, and they're going to basically calculate how much funds are being deposited into the account. So if your borrower is putting $20,000 a month, pretty consistently into a bank account that they're using for their business purposes, the way the lender will look at it is like it's $20,000 being deposited in, but they usually hit them at a 50% expense ratio. So instead of giving them a $20,000 a month income, they're now dropping their income back to $10,000. But if this same borrower was to go the conventional or FHA route, now we have to look at their tax returns, their W-2s, and their, and possibly their pay stubs if they did get paid a pay stub, if they were paying themselves.
So Aaron, I got a question.
Yeah.
So let's pretend I'm self-employed.
Mm-hmm.
And so I want to use this stated income program.
Yep.
And so all I got to show is 12 to 24 months of bank statements?
Correct. Yes.
Or are they going to look at like tax returns as well?
No. So, all these programs we're going to talk about, we don't look at tax returns, W-2s at all. And that's saying if they are paying themselves a W-2, but yeah, there is no tax returns involved. So yeah, the lender is just looking at the bank statements. Now, I do want to kind of round it off with, when you're going the bank statement route, you really want to have your CPA kind of on board too, because some of the conditions lenders ask for is, they might ask for P&L statements, but they want to really get a CPA letter stating that you're in good stand-in. And another thing that can really help out your borrower is, instead of getting hit with a 50% expense ratio, if their CPA looks over all of their statements and shows that their expense ratio is not 50%, let's just say you're a realtor, you're 1099, you're not writing off as much as a normal business would, you could get hit with a 20% expense ratio. So if you're that same borrower with $20,000 a month of deposited income in your business account, and you're only getting hit with a 20%, your monthly income is significantly higher now. So yeah, with the bank statement loan, it's all about your bank statements and what their deposits are. Now, the one red flag sometimes that I'm noticing with lenders.
Let me jump in real quick, Aaron.
Yeah.
So the 20%, I want to back up to that. So because I don't know if I fully understand. So if I can show $20,000 of deposits through this bank statement loan program,
yep,
right, then they're automatically going to deduct what, $4,000 a month, 20% from my income.
So the only way that it will get hit at 20% is if your CPA states that your expense ratio is only 20%. Most lenders hit you with a 50% expense ratio.
Okay, yeah, you're talking about traditional.
Yes, exactly. Yeah, 50% is pretty much the norm. So if you have somebody who's needs to bump up that income a little bit, let's just say they're going for a $500,000 property, the best way around that is to have them go to their CPA and get them to produce a CPA letter stating that their expense ratio is not 50%. It is in fact 20%. And we can actually get that income bumped up. But the traditional norm is 50%. Whatever you're depositing into your account, most lenders just have it due to the 50% expense ratio.
Okay. So you're talking if I'm trying to get a bank statement loan,
Mhm.
right? And I'm making 20,000, I'm depositing $20,000 a month
Yep.
across the board. Your lender is going to say, okay, we're gonna say $10,000 is the income.
Yes, exactly.
Unless I get something from my CPA stating that my actual expenses are only 20%.
Exactly.
$4,000 a month.
Yep. Exactly right. Yes.
Okay.
Yeah. Just keep this in mind too. You know, this same borrower, if they're putting $20,000 a month consistently into their business account, and it's been proven by the lender, you know, a lot of these self-employed borrowers, you know, couldn't qualify for possibly more than $3,000 or $4,000 a month, which is really difficult to get a house in this market today. So this is a really good option, you know, for your self-employed borrowers. And I would say for those who are looking for a primary home, this is probably one of the best options out there today, honestly. You know, it's a great program. Like I said, if there's any issues where we need to get the income up a little bit, we just work with a CPA and see if they can qualify for a lower expense ratio. And then we can get that income bumped up just a little bit to get them maybe a little bit more buying power.
Okay. So who can you think of? Obviously, you know, self-employed people, and all of us are self-employed, right?
Mhm.
For the most part.
Yep, exactly.
So, but the norm, right? This is the normal self-employed person has to have 2 years of tax returns and this and that and the other thing. So this would be kind of a way, maybe if you only have 1 year of tax returns, but you've been in the business for 2 years, you just haven't filed for taxes yet. You don't want to wait necessarily for that next, because interest rates are going up and you want to get into something now. This would be something for those folks. Now I'm guessing the interest rate would be a little higher on this, something like that.
Exactly. You know, everything is weighed out by risk by a lender. So the more risk, you know, they usually come with a higher rates, you know, possibly higher down payment. So with this particular loan type, you know, they do ask for 10% down. So 90 LTV, 90% loan to value ratio. So yeah, I mean, we're looking at 10% down. So your traditional mortgage, you know, FHA, you can put 3.5% down. Conventional, you can do 3% down if you're a first-time home buyer, but usually about 5%. So yeah, it comes a little bit higher down payment, a little bit higher rate.
Okay.
But again, you're still able to get the home.
Okay. Now, would this only be like for owner occupied, or somebody wanted to do an investment property with this?
So when it comes to investment properties, there's another loan type that's a no income verification. Now, this one, it doesn't equate any income at all. And it's called a DSCR, so debt service coverage ratio, DSCR. It is literally the top investment loan option out there. And why I say this is, you know, we deal with a lot of investors as brokers, a lot of them that couldn't get the traditional financing because they write everything off. The other thing too is if you do a couple, you know, traditional loans, conventional FHA, whatever you will, unless you're making $1 million a year, your DTI, debt to income ratio, is going to be very high on a third, possibly fourth home. So a debt service coverage ratio loan, DSCR, is only for investment properties. It can't be owner occupied. So this is for like your clients who are looking for short-term rentals or just looking to buy a house and rent it out and hope for asset appreciation. But with this particular loan type, the lowest you can put down is 15%. Most lenders ask for 20%. But this particular product is based off your assets. Do you have the amount to put down for your down payment? And you have up to 6 months reserves, meaning whatever your mortgage payment is with the insurance, tax, and everything rolled in, you have 6 more months worth of payments in your bank in case, you know, you had a couple bad months. Now, one more thing with this loan type is it requires a 1007 appraisal. So 1007 is giving you what the market value is on that home. and what the market rental value is. And most lenders want your DSCR ratio to be exactly 1. And what that means is if the appraisal comes back that the house is, market rental value is $2,000, your mortgage payment with taxes, insurance, and association fees need to at least match that $2,000 or be below. So they want a positive DSCR ratio there. So, I mean, there's kind of multifaceted type of loan, but really, this is the number one loan for your investors. They can, get as many of these loans and never have to worry about their debt to income ratio. So if they're strictly just fixers and flippers, or just love buying homes and sitting on them and creating cash flow, this is what most of them go for, is a DSCR. And it has no tax returns are required, no financial statements at all. It's the only thing they're really looking for is your bank statements. They just want to make sure you have the money.
Okay, so if I want to buy an investment property, if I want to buy an investment property and I have 20% to put down, I have 6 months in reserve, right? At least, then, this would be a good program for me. Right?
Absolutely.
As long as the numbers add up and as long as I'm having positive cash flow, meaning, or break even cash flow.
Exactly. Yes.
Right?
Correct.
So if it's $1,200 a month, they want to see it's, the rents come out to $1,200 a month or more. Do they include any kind of a vacancy allowance or no?
No. Yeah. They don't even factor that in there. As long as the DSCR ratio has an even or positive cash flow and you have the money in the bank, this is an easy option. Now, there is one caveat to this particular loan type. So lenders want to see that you have at least a primary home or another investment property. So they want to know that you've already know basically how to run the ins and outs of owning your own home. So there are some lenders out there that will allow 12 months of rental income. But for the majority of lenders out there, they want you to at least have your own primary or investment property already.
Okay, not both, but one or the other.
Exactly.
This property work for, so Aaron?
Yep.
Does this work for Airbnb?
Exactly right. Yes. Yeah, I would say the majority of our clients right now are doing Airbnbs. Vacasa or any of the other short-term rentals. This is usually the loan program they go for. And I would say it's probably what we deal with the most is, most of your entry-level investors who see that short-term rentals are a great cash, return value. So yeah, this is perfect for Airbnb. Exactly.
And someone, I think someone has put the question in the chat of, do you have to be set up as a business with a business account and a business name?
Yeah, so that's a really great question.
A separate business entity.
Yeah, that's a really great question. So yes and no. Like, you do not have to. You can do a DSCR loan in your own personal name. I would say the majority of clients we deal with do put it in an LLC. And mostly it's for asset protection. So I think what most of them do is once they're under contract, they're creating an LLC, you can have that completed in like a day or less. And they put it into the actual address name, the LLC, and then it's strictly for asset protection, but you do not have to have a business entity or an LLC to do this. You can do it in your own personal name. Easy enough.
What are the interest rates like?
Yeah, I mean, it's a good question. It's really, really difficult to gauge interest rates when it comes to DSCR, especially lately. I know, with everybody in this industry, rates are just getting crazy. A couple months ago, before rates started skyrocketing, we were getting 4s and 5%. Lately, we've been seeing, mid 6s up to about 8%. It really just depends on the entire, your credits, how much you're putting down. If you're kind of a more savvy investor, a lot of those things factor in. But, I would say mid 6s is about what you're going to see if you have, pretty good credentials. And most of it's based off the FICO and what you're putting on your down payment.
Okay, so maybe 1 to 3% above owner occupied type
Yeah,
loan.
I mean, exactly. It's a very fair assessment. Absolutely.
Okay. Now I think
Aaron, would someone use this for, would someone use this for a commercial property, or is it purely residential?
Yeah, so this is purely residential. When it comes to commercial loans, they kind of are set up very similar to the DSCR because they also do run off the DSCR ratio. Lenders want to know that you're at least have a cash flow, either it's even or you're making a cash flow out of it before they're going to lend on it. But DSCR is technically specifically for residential.
now, Aaron, I think this question came up before for the what was it called? The bank, what's it called? The bank loan, bank statement loan. Yeah, bank statement loan. So because it kind of came up at the end of that conversation. So you definitely need a business checking account. But obviously realtors are self-employed. They typically do have, a business entity. They're doing business under their own name. So would that still work for realtors and other self-employed people who don't have?
Yeah, now you don't need to have a business account to do a bank statement loan. But you're going to have to answer some more questions with the lender. So if you're using your own personal accounts, they're going to want to know what deposits are coming from, your real estate. If you're using a realtor in this example, they want to know what is going into the account, from your real estate commissions. So you might simply just have to pull up your PDF for your last 12 months of bank statements and just do one of those like digital highlighters. Hey, this is a commission, this commission, this commission. And that's what they're going to use for your income. So yeah, you don't have to have a business account. It just makes it easier because you're doing a little less work, but yeah, you can easily do it through your own personal account as well. You're just going to have to pinpoint what's being used or being deposited from your your real estate commissions or your business.
Okay, thank you for clarifying that. I appreciate it.
Yeah.
What else? You got some other loan types to talk about as well, right?
Yeah. So I mean, there's two other loan types, that really fall into like almost that stated income. Another one is a P&L only loan, so profit and loss. So when it comes to P&L, now this one, it's not used as much as your bank statement, DSCR. Those are definitely the two biggest ones, but P&L, it usually requires about 20% down payment. There are a few lenders that might go down to 15, but for the most part, you're looking at 20% down payment. But your profit and loss statement. So once again, you're working with your CPA or your tax preparer. They're going to produce a profit and loss statement showing, how much you're bringing in for your business, what all your expenses are. It factors in depreciation, but in the end, they're going to give what's called a net operating income. So it's basically like your profit. And based off of that profit, you can get a loan based off of what your net operating income is or how much you're bringing in after all expenses. One thing that can get factored back in is depreciation. So if you're running a little business that has multiple vehicles or machinery, those things are depreciated and you can write those off and you can roll that back into your profit on your business and have a little bit higher income at the end of the day. I mean, it's a good option. You can do a profit and loss based off 1 year or profit and loss based off of 2 years. Like I said, it's not as common as the bank statement or DSCR, but it is another loan option that gives your clients, a little bit more wiggle room to find a loan when they get denied for that traditional loan.
Now, as a tool in your toolkit, when would you recommend this over like a bank statement loan or a DSCR? Is that what it's called?
Yeah, DSCR. Honestly, to me, it's kind of a last resort style loan. So when you're dealing with a broker like myself, you know, a lot of the clients we get are those who have gone to the big direct lenders or banks and got denied. So what we do is we just start running down through our product list, and we're reaching out to lenders, running scenarios by them and trying to get them approved for some type of loan. So I would say for ourselves as being a broker, it's usually one of our last resorts is to go the P&L route. And it's simply because you're putting 20% down. So if you're going for an owner occupied property or your primary home, you know, my goal is to try to get you in that house for the least amount down and closing costs. And you can put, you know, less down with a bank statement loan than you can a P&L. But really where it comes up is if their bank statements are not quite putting enough into the bank, or their expense ratio is just killing their buying power, then we'll look at a profit and loss statement. So usually it's kind of a last scenario for us.
Okay. And what's the fourth program?
The fourth one, now this one's a really kind of interesting one. It's got many different names depending on the lender, but it's a true no income verification loan. One lender likes to call it their community loan. We have other lenders that call it a no income, no ratio loan. And the no ratio just means it doesn't factor in DTI, because you can't get a debt to income ratio when you're not using income. So this particular loan type it's a strict 20% down. It's owner occupied. You can do it for a second home, and you can even do it for an investment property, but it's a 20% down. Depending on the FICO now, you have to have a good amount of reserve. So if you have an over 700 FICO, you know, we can get it down to possibly 6 to 12 months reserves, but the majority of lenders who do offer this product, they want 18 months of reserves. So really, as long as you got 20% down and you have 18 months of reserves in your bank, you can get qualified for this loan. There is no income verification at all. So this is as close to the stated income loan back in 2008 to 2010 before they kind of did away with it. But it's called a community or a no ratio loan.
So community no ratio loan, 20% down, ideally 18 months in reserve. If you have
Exactly,
maybe
yes.
over a 700 credit score, you might be able to get it down to 12 months or so reserve.
Exactly. Yeah. If you're stronger FICOs, yeah, we could get it down, but I always just tell my clients 18 months of reserves, just give them the worst case scenario, because that's what most lenders are looking for.
Okay. Any other questions for Mr. Aaron? He's here to obviously answer questions about, you know, this is your buyer that maybe every other person has said no. You know, all the traditional lenders have said, nope, sorry, we can't help you because we can't fit you into this square peg, square hole, right? He's kind of the oblong hole, oblong peg, right? So that's why I wanted to bring him on today. So, you know, you get that buyer that keeps.
Information.
What was that, Sabina?
Can we get his information in the chat?
Absolutely.
Thank you.
Absolutely. Aaron, would you mind typing your information in the chat, please?
Yeah, no worries.
So this is just another tool in your toolbox. You know, obviously HomeSmart doesn't have a lender or a partner that has this type of program, you know. So I just want to bring it to y'all attention to make sure that you see it, that you know about it. Obviously it's not going to be for every circumstance or situation, but this could be, you know, 1 to 2 transactions per year that end up, you know, that you save because you know a person like Aaron that can bring this home. So any questions for him while we got him on?
Yes, I have another question. Do you only service the Florida area?
No, we actually do work with other states as well. We're not licensed in all 50 states. We're kind of still working on getting as many states out there. But if it's a DSCR loan, we can actually write those in just about every state without actually being licensed in that state. But yeah, it just really depends on which state you're looking at. We are licensed in many other states currently.
Because we talked about so many loan programs. That DSCR, Aaron, that's the loan where you're putting approximately 15 to 20% down, where you that's you're doing short-term, long-term rental as an investment property, not owner occupied, right?
Yeah, correct. Yes, exactly. Yeah, it's strictly a non-owner occupied loan. I mean, there are ways of getting around that, but it's it is for for investment only.
And is this a typo or is it?
Can
I thought it was
confirm
Empire.
that question?
Yeah, Empire FI. So for like Empire Financial, empirefi.com.
Okay.
Yeah, I would throw my business card on there, but I'm not quite tech savvy on how to transfer from my phone.
No worries.
Okay, it's Empire. I don't
So
see
just
the
to
Empire.
confirm, Aaron,
So empirefi.com.
Okay, it says MIRE on this chat.
Yeah, I think it was a typo. He's trying to type and talk to me at the same time, so I appreciate that.
Isn't it right? MPIRE.
Well, I think your email's right. I think when you wrote your company name after your name,
I got you. Yeah, I see it now. Yes. So yeah, it's Empire Financial. You're correct. I did mess up there. Yeah, there you go.
so Empire, but the E dropped off. Like, oh.
Yeah.
You got
So
lazy.
our brokerage, our office is in downtown Winter Garden. We are literally, we're a block off of Plant Street, so when I get off this, I'll be heading to the office, but I can walk from my office, to the main like strip of Winter Garden, hit all the little restaurants. We're looking to open our second office in Winter Park. We haven't quite got the location yet, but that will be our second office. Now, just like yourselves, I mean, most of us, work from home, remote. I myself, I like to go in the office. So I'm usually there 2 or 3 days a week. And then I spend a few days at home, and then I'm always kind of out in the field, trying to find, new clients and talk about new products, because there's a lot of products out there. If you ever want to ask any questions, I like to say I'm available 24/7. I do go to sleep usually, like 10 or so, but you can always text me. I respond, fairly quickly. I do have a 2-year-old son, and my girlfriend is a flight attendant. So I'm 3 or 4 days a week. I'm solo dolo with the baby, but I always have my phone around me. I always respond. If I can't call you back because I'm in a meeting or kind of in a situation with work or whatnot, I always try to at least read the text of my voicemails. And then I usually like to send a text back, let you know that I'll call you, as soon as I'm available, usually within 30 minutes to an hour. But yeah, weekends, I know realtors operate mostly on the weekend. So once again, I'm available. If you ever have any questions or just scenarios you need to run by me, yeah, just let me know. I mean, I love helping out. So I can definitely answer any questions you guys have. What I'll do is I'll also send my business card to Jeremy, or take a picture of it and send it to him via email. So maybe you can send that out if you ever have any questions. But yeah, our office is in Winter Garden. So if anybody ever needs to stop by or just ask any questions, just let me know. I'm always available.
All right. Thank you so much, Aaron.
Absolutely.
Anybody else? Any other questions for Aaron while we got him here? Nope. All right. We're going to wrap things up. Aaron, thank you so much again for your time. We appreciate you bringing this knowledge to us so that we can have the potential to help more of our clients close deals that we wouldn't even know how to close without your knowledge that you just presented for us. So we really appreciate it, man. Thank you so much.
Yeah, appreciate it, man. Thank you so much, everyone.
Anything you want to add, Freddie, before we sign off? Freddie? Maybe he already jumped off. All right. Thank you, everyone. Have a great day and
Thank
go out
you,
and sell a house like
everyone.
Renee already
Yeah.
did. Come on now. Let's go.
See you later.
Take
Bye,
care.
everyone.
Bye-bye.